Have you ever wondered if there's an easier way to make consistent profits in the stock market? When I first began investing in stocks around 2005, I struggled to find any consistent success. Now, despite my efforts, identifying winning stocks felt impossible. However, through perseverance and determination, I eventually uncovered a formula that transformed my approach, and everything changed. By blending a timeless, proven investment strategy with cutting-edge technology, where my background in software engineering came in very handy, I transformed my portfolio from failure to success. What I learned eliminates guesswork, keeps your strategy focused on winning stocks, and ultimately sets you up for long-term success in the markets. So to help make your investing journey 10 times easier, here are the key weekly habits I follow that will help you stay ahead of the market and find winning stocks before everyone else. Now, to understand why these habits I use work, let me ask you this. Why do successful investors consistently outperform the market while others struggle? It's not luck, it's preparation. And that's why I follow a simple, repeatable process every weekend to scan the market, filter out the strongest stocks that the market dictates are the cream of the crop and not what we are being told are good stocks by all the so-called online experts, which sets me up for a stress-free and successful trading week. The weekly routine now averages us over 30% per annum, a track record which had our Luxembourg-based hedge fund approved in 2023. This is how the routine looks. Every weekend, I scan the US and UK stock markets, over 20,000 stocks, to find long-term opportunities where trends could last for months, even years. This isn't just any scan. It's a proprietary filter we have perfected over the years, designed to identify stocks that are breaking out right at the start of their next major uptrend and primed for strong, profitable moves up. This scan generates an average of 100 to 300 stocks, but here's the reality. We don't need them all. Many of them just won't meet our strict criteria. We want a handful of the very best high probability stocks, quality over quantity, where the quality stocks are giant winners, absorbing all the small losing stocks, making them, well, insignificant. This was a pivotal realization for me. I was simply trying to do too much. I had no clear system for identifying winning stocks, and even when I did buy one, my approach was chaotic, jumping in and out like a headless chicken. It was both frustrating and counterproductive. My wins were small, while my losses always loomed larger, leaving me stuck in a cycle of getting nowhere fast. The key to making consistent profits isn't chasing hyped up stocks after they've already moved. It's being positioned in the right stocks before they break out. Now, sounds so simple, and it is, but understanding that I had to find and buy stocks just before they break out and start their next major uptrend was a complete revelation for me. My stock buying was limited to companies I was familiar with or buying from. You know how you hear influencers say, buy from companies you like and trust. That was me, and I can tell you that is trash advice. If you want to waste time, that's how to do it. Or I was buying stocks that were being hyped up online by analysts and influencers who, in reality, knew just as much as I did, which back then was not much at all. 20 years on, and with me now having a thriving education community and a hedge fund, I can tell you it is very much the case that those who position themselves online as experts, or you are made to believe are experts, genuinely know very little about picking good stocks and then turning them into profit. So how do we find these stocks about to break out into their next major uptrend and narrow down to those giant winners? That's where the 3-screen setup we have developed comes in, that allows us to spot the best stocks in seconds. This method lets us quickly determine whether a stock is a potential winner or just noise. It involves 3 time frames. First, the monthly chart, the big picture, which tells us the stock's history and the overall trend direction. Second, the weekly chart, a closer look at the stock's performance, which helps us confirm if there's a strong trend present. And finally, the daily chart. Little sister to its big sister, the weekly time frame. If it mimics the weekly time frame, we have a strong candidate on our hands. If a stock is moving up on all three time frames, we have what we call multi-time frame alignment. If a stock has a history of consistently moving in the same direction on all three time frames, we have a strong candidate for the portfolio. A stock with an edge, a high probability stock. In fact, we have a 3-second rule that goes with the 3-screen setup. If we cannot identify a good stock in 3 seconds, then it isn't one. That's how we efficiently get through a list of 50 to 300 stocks created by the scanner in 30 minutes to an hour, cherry picking only those worth our consideration. And here's the thing, it's actually straightforward when you know what you're looking for. You can imagine this being a mic drop moment for me 20 years ago. No more following fake gurus online, no more buying hype stocks that failed miserably, all replaced with a systematic, rules-based approach with a proven history of performance. After filtering through the 3-screen method, we're left with 15 to 20 strong stocks. But here's something else I learned. We must refine this list even further. We only want the very best stocks, those with the highest chance of growing into giant winners. So out of the 15 to 20 stocks we have remaining, all of which have potential, we don't just pick any random stock that looks good on a chart. We're better than that. We apply additional filters to narrow down to the cream of the crop stock, stacking the odds even further in our favor. We look at earnings reports. If earnings are coming out soon, we remove the stock. Earnings can create unexpected volatility that can swing you out of a position. We have high volume requirements. Stocks must have strong liquidity and investor interest, particularly institutional interest, which will push the stock higher. Here's what I use so you aren't left guessing. For US stocks, we want 1 million average daily volume, and UK stocks over 100,000 average daily volume. This process works well in all markets. We've helped investors in India and Australia apply the same method to find stocks that have returned over 100% gains. So why does the power of preparation work so well? By doing this every week, we eliminate uncertainty. We go into the market prepared, knowing exactly which stocks are poised not just to perform, but outperform the index. These are the stocks that rise faster and further than the index, enabling us to achieve significantly higher profits compared to simply investing in an index tracker fund. For example, the S&P 500 has moved up 75% since 2022's low at the time of this recording, but GoDaddy has moved up 225%, Fiserv has moved up 165%, and Nvidia has climbed up over 1,000% in the same time period. These are the stocks we filter out and invest in through the scanning and analysis process I have just broken down for you, and why we average over 30% per annum when an index fund will often give you anywhere between 8% to 11% per year. Over the past 10 plus years, I've invested in thousands of stocks and learned a lot along the way. I've condensed everything I've learned into this video, including the one key insight that completely changed my approach and made me consistently profitable. Click here to discover what it is and how you can apply it to your own investing.